limitation. So we have to see how much your income is. Based on your income, we can qualify you up to 45% of your gross income per month as far as approval. As how much down payment, we need to see you need to see and check your credit score. The more your credit score is higher, the more flexible you can put as low as 5%. In other words, if your credit score is 680 and up, you can put 5, maybe 3%, 5%, all the way to whatever you want. If your credit score is below 680, between 620 and 680, by the regulation and the guidelines, we have to go with only 20% down. Okay? And as far as how guidance price their profit rate, it's a combination between how much down payment, what's your credit score, and what's the length of the contract. Is it 15, 20, or 30 years? Because we are not like other conventional mortgages. Meaning, if you go to conventional mortgage, they will tell you how much down payment you will put. You tell them 20%, they will say, okay, fine, the rate is 4%, that interest rate. If you told them I'm going to put 25%, the rate will stay the same, 4%. However, they will force you to buy what we call private mortgage insurance. Private mortgage insurance is an extra layer of protection for the banks to protect them in case you default on the mortgage. Guidance with our program, we cannot do that. It's against the Sharia and the compliance. We cannot insure our investment. What guidance is doing is we are insuring our own self-contract. Okay? Then the profit rate changes from person to person based on their down payment. The more down payment they put, the higher the credit score, the less guidance will charge them. Okay?
Last question. So I assume that guidance uses the 3 score that you
Correct.
score, the FICO score.
Correct.
So is it the same as a banking where you use the middle score?
Correct. It's the same guidelines we all have to go with. I mean, even though we are offering different programs, we are audited. Even the form, all the banks that are using the form that has interest loan, we are forced to use the same form because we cannot change it. It's across the nation. We have to use the same form, but as far as the contract is completely different. So same thing, credit score, down payment, even the work history, approval, same thing.
So if my score is 685, then...
We'll go with the middle one.
Okay. Well, if my middle score is 685, right, then my wife and I can put down 4%?
Yes, between 3, 4, 5, yes.
Okay.
And here's one thing. As far as the approval, based on your income, we can see 3% is fine. But let's say you want a house 250, and 3% will not cut it. We might ask you to put maybe 5% or 6%. So it's all negotiable based on your income. Yeah.
How do we find the house?
The house, it's very easy to find. I mean, you can either look for a realtor. I am also doing both. I'm a real estate and I'm also a loan officer working with guidance. So if you need any help, my business card is right here, inshallah, happy to assist. So I just want to emphasize one thing. If you credit score between you and your wife, we'll take the lowest between both of you. Okay, so if I'm going to take your income as an applicant, you and your wife, we have to see your income both, and we have to see your credit score both, and we have to go with the lowest between two of you, inshallah. Okay. Yes, brother.
Do you work with HUD homes as well?
I'm sorry?
Do you work with HUD homes as well?
You mean like down payment assistance, things like that? Okay, so that was the question I was asked earlier. So the down payment assistance was offered in the county level. Okay, it depends which county you are buying from. Let's say from Orange County. Orange County, they have their own program to get you qualified first. You have to see the income. You have to make sure your income is in the level. The credit score also. You have to pass like I think 8 hours class or something. Yes, with these counties, we can take them. And here's what's going to happen. Because the county will give you, let's say, $10,000 or maybe $20,000. Even though that money they are giving it to you to help you, it's not free money, at least now. They will put it as a second lien against you for at least 5 to 10 years. So every year passes by, a portion of that $10,000 goes away until you pass 10 years, then there is no more lien against you. So when we are going to be doing approval, we have to count that lien in the approval also. So to answer your question, yes, we do take them as long as they are okay with us. Okay.
I have two questions.
Yes, ma'am.
You're taking the lowest score,
Yes,
husband and wife.
correct.
Why?
It's a guideline,
You feel like
not guideline, government guideline.
you take the lowest score.
Yeah.
But you indicated earlier that your rate and the amount of down payment
Mhm.
that person has to pay is dependent upon.
So here's two things. We're talking about approval first, then we're talking about pricing. So you have to get approved first, then we can see the rate, if you can put more down or maybe put less, then we can talk about pricing. But as far as why we have to go between the lowest, because that's basically the Freddie Mac guidelines and Fannie Mae. That's basically what's in.
So that's pretty much like conventional law.
Yeah, like I said, it's the same guidelines. Like it's the same rules everybody has to play with.
Second question,
Yes.
is that chart that you showed us a minute ago,
Mm-hmm.
is that the same or similar to this one?
Yeah.
Isn't that the same as the amortization chart?
Exactly. That's true.
So it's still the same as behind.
Absolutely. Like I said, as far as math goes, it's the same equation. You just plug in numbers and we'll give you the exact breakdown. So the math does not discriminate if it's halal or haram. It's actually the contract, the concept that will dictate what you are doing. So the same way the amortization table is going, like doing the split, is the same over here as well.
At the end of the loan,
Mm-hmm.
when the typical amortization schedule shows how much interest you pay
Correct.
versus your principal balance, what is this one show?
Over here, I think you don't see it a little bit. It shows profit. So we have acquisition versus profit. The profit is the money that goes to guidance as far as what they are making from you every month. So let's say this is your balance, this is the mortgage you took from us, and this is the monthly payment you're going to be paying for like the 15 years. And this is the split. I mean, this number is the equal between this plus this. So the interest with conventional mortgage is this one, is this section. This is how much money they will make from you. So if you are curious to see how much guidance will make, like let's say in 15 years, I would say between 40 to 50% the value of this. Let's say at the end of the term of 15 years, you might pay like $150,000, $145,000, for example. Okay. Yes, sister.
If you purchase a house for like 10,000 and you need 20,000 to fix it, would you give the 30,000 for the repairs?
There is two things with your question. First of all, we have to buy a house in a living condition. So it has to be move-in ready. It cannot be major repairs like there is no AC, there is no roof, there is no carpet. That's again a guideline and regulation we have to respect. Second thing is we have a minimum contract we need to participate, which is $60,000. So $60,000 and up, this is how much our portion will be. So we cannot buy houses below 60, maybe 50 or $45,000. So when you look for a house, make sure it's in living condition. Cosmetic stuff, paint things, it's fine. But if there is like a big hole in the roof, there is no AC, there is this, it's not gonna pass the inspection, it's not gonna pass the appraisal.
Do you do commercial property as well?
No, ma'am. As far as right now, we only do residential, and commercial, inshallah, is going to be in the works in the future. All right. So, any other questions?
I have a question.
Yes, ma'am.
So, how do you go about it if a person had purchased a home that's not with guidance, but went with like a conventional bank?
Mm-hmm.
What advice would you give?
We do refinance. We do refinance, basically helping people to switch. And the way we are doing it is, guidance will pay off whatever balance you own with the bank, okay? And to determine, to create a new contract, we have to see how much you share and how much is our share after we pay off that bank, for instance. Then we have to appraise the house. Let's say the house is appraised for $300,000, and we pay the bank $150,000. So basically, your equivalent in the house is $150,000 automatically, right? So we're gonna create a new contract based on a co-ownership agreement. This house will be owned 50-50 with the installment plan with 15 years until you completely buy us out. Yes, we do that.
Could you all, put a chart together in your booklet here
Mhm.
that will show the comparison to if I borrowed $100,000 and my home costs $100,000?
Okay.
And I finance it through you,
Mm-hmm.
and then $100,000, because I finance it through a commercial bank. Could you have those two pages there?
It's
for-
gonna be the same as long as the rate is the same. Basically, if you go to the bank right now, you tell them, I wanna have a loan to buy a house, and they will charge you interest 4%. You come to guidance and they will buy it with you as a co-owner. They will charge you 4% as a profit. It's the same numbers.
So the
Yeah.
profit is upfront.
No, upfront is every month. So basically, every month you live in that house, you are paying, like for instance, right now we have $100,000. Okay, let's say the rate for this one, it says right there 3.75. We'll take 3.75 times $100,000, whatever we have in the balance. That's for the year, so we have to divide it by 12. Okay, that's how we got this one here, the 312.50. And how we get the next one, 311, again, we'll see how much balance you own next month, times the rate, divided by 12, and we will see how much we have to charge you. So let's say, for instance, so the month number 2, let's say between here and month number 2, you pay, let's say, you pay $36,000. Second month, you have $36,000 coming from somewhere. You say, you know what, I want to buy $36,000 from my share directly. So month number 3, it will jump all the way to here. So basically, you saved all these months. You saved all the portion of the profit over here. You saved it. So the more you make extra payment, the less money goes to guidance, and the quicker you own your own house. Okay.
This is my last question.
Yes, please go ahead. Any questions you have?
So when I borrow that $100,000,
Mm-hmm.
for example, in 30 years, I have paid the bank $500,000.
Okay.
Depending on the rate. So if I were to get that same $100,000 from you at the end of 30 years, what at the bottom line?
It's going to be the same.
It's gonna, so where the bank has made $500,000 off me, what term are you using Islamically for the money that you're getting? What
Profit.
your profit?
Profit. So I want to just clarify a few things. First, we are not offering loans. That's one. So when you go to bank, yes, you will get loan definitely. The second is when you come to us, we'll buy the house with you as a co-owner. Okay. So we are creating an LLC with you. So for the 27,000 families we closed with, each transaction we have LLC with the serial number with the customer's name to register it. Okay. So they have like a legal law, like everything that regulate this LLC. I just want to emphasize one thing as far as you mentioned the difference in the beginning. So something that's unique to guidance, since we are creating LLC in each transaction, there is a fee to maintain this LLC. Okay, guidance as a company is paying for 2/3 of this maintenance, and the customer, the home buyer, pays 1/3, which is equal to $18.75 every month. So the normal mortgage payment, profit, acquisition, profit, taxes, insurance, you will see $18.70 fee, and it's called LLC fee, and it gives you total. But to answer your question, as far as the same rate, it will be the same. It might be off just what that $18.75 that does not exist with commercial mortgages. Yeah. Yes, ma'am.
How much collateral do you have to have?
How much what? I'm sorry.
Collateral.
That's the thing. We don't. I mean, everything is based on your income, your passive income. Whatever you are getting, we don't see how much money you have in your bank. So let's say, for instance, somebody comes to me and he said, I have $1 billion in the bank, but I don't have passive income, I don't work, I cannot qualify him.
So say I started working 1 month,
Mm-hmm.
is that okay?
No. As far as employment requirement, that's a good question. We need to have 2 years employment history. It doesn't have to be the same employer though. It could be different employers, as long as it's in the same field. Okay, so that brings me to the qualification, how people can qualify for this. So again, like I said, 2 years work history. Okay, your income has to be steady, shown in your pay stubs, and it has to be claimed in your tax returns, because one of the most challenges we have as Muslims is especially for the self-employment for people who drives like they are servers and things like that. they don't claim as much in their taxes, even though we know for sure and we can say it, they make more money, but unfortunately we can only go with what's been on the paper. Okay, so everything has to be disclosed in your taxes, and since this is the tax season, so whoever is interested, maybe you, your friends, so make sure they put file the taxes the proper way. Okay, so 2 years work history and credit score 680 and up, and a minimum 5% down of 3%. So this is another challenge we have as far as down payment. Sometimes some people, they are not ready to buy the house. So the money that you're going to be using for this plus the closing costs, it has to be your own money. Okay, if you can get it from family or for somebody as a gift, that's completely fine, but it has to be staying in your bank for at least 30 days to be seasoned. Okay, after that we can say that this is your money, you can use it for closing. Okay.
So even
Yeah.
like, can you use child support?
Yes, it's an income. Yes, as long as you have it for the last 6 months, you have to.
6 months, not 2 years.
No, child support only 6 months. So there is some exception to this 2 years rule. First, students who just graduated, maybe they are doing like medical school, something they just started and they have the first job, we can get them approved right there because they spent like years studying for their career and they just get a contract. That's good. We can go with that. Second, Social Security. People who are getting Social Security, we don't have to wait for 2 years. Okay, that's fine. Same for the child support. As long as you have 6 months, that's completely fine. Retirement also, if you have them for at least 2 months, that's completely fine. Yes, but okay. So that's a good question. So brother is asking what happens in case you lost your job and you cannot make payments. So this is where that late payment comes in. So if you lost your job and you know you are in a temporary situation where you can fix it, maybe you're looking for a job and you're gonna find it, then give us a call. Tell us, listen, I might not be able to pay this month, I just lost my job, they will work with you, okay? The problem is when the person is not communicating with us, and it's been more than 3 months, more than 5 months, more than 6 months, and there is nothing. We call, nobody's answering, then in that case, I mean, since we have an agreement between me and you to buy this compound, this property from me, and if you cannot, then we have to disclose this contract, we have to resolve this partnership. By doing so, we have to take the house on the market, sell it, and each one takes their own share. So let's say we sold our house, okay? And guidance, they have like say $100,000 that needs to be paid, okay? You sold the house in the market for 150. You pay guidance $100,000 left, and the $50,000 they're completely yours. We don't share with you as far as profit, okay? The second scenario is when we have $100,000 that we are expecting to get from you. However, the house is put in the market, but it just gets sold for maybe $60,000. So now you just give us $60,000 and we are losing $40,000. In that case, that's where guidance will absorb this loss and they will never take you to the court to file the deficiency judgment against you for this. Okay, I hope that answers your question.
So if we, for example, we lost 40,000, should I have to pay you because we lost it, or it's gone?
It's gone. That's it. Because I mean, we sold it with a loss. That's what the no recourse contract is for. Okay, because again, like I was saying earlier, as far as company making money from purchasing the house, there is nothing wrong with it as long as you have to do it the Islamic way. You have to take some risk on doing this transaction. The banks, however, they have almost zero risk. They will ask you to pay PMI to insure the mortgage if you are putting this down payment. If you sold the house, they are going to pursue you for whatever loss. So it should not be going one way, it should be both ways. And that's what guidance is doing.
And what I pay if I after loss?
We both lost, yes, correct. So I don't know how much you pay down payment. Maybe you pay $5,000. When we came and we see how much we lost, 40,000 compared to 5, it might be different. And it could be the opposite. Maybe you put a bigger down payment, and we lost maybe only 10,000. So it works both ways. The only way with guidance, because right now the breach of the contract comes from you. You are the one who decide to break this contract. But if, for instance, we own a house, let's say like this guy Trump is doing, he said, I'm going to build a wall, and your house is right there when I'm going to build it. We can take the house from you and we can compensate you. but the compensation they will give you, it's not worth the house to buy it. So in that case, this is kind of eminent domain, okay? This is basically allows me and you, if I own 60% of the house, I will be losing 60% the value of that house, okay? Any other?
What percentage of, sales, I guess, would your company get on refinancing where the person has come to you after their traditional loan versus newcomers?
It's basically the same. So the rates, they change every day. The rate of the market, like how much I'm going to price the person who's going to refinance, right? That was your question.
No.
Okay.
Okay, say for example, Kimberly has a loan with you.
Mm-hmm.
Whole sisters have a loan with guidance.
Okay.
We have, a group of new people. What's the percentage of our portfolio that are new customers versus customers that left traditional bank?
Oh, you're talking about statistics, how much refinance compared. Mainly, to be honest with you, we do a lot of purchases versus refinance. For a simple reason, people are discovering this program. Some areas, the houses are getting cheaper to access to. And the people who refinance, they are just few who purchase with the conventional system. And since they heard about guidance, they want to switch it. But mainly it's purchases. I think I did like 3 refinances this month compared to 10 purchases. Just to give you an idea. Yes, ma'am. Yeah, no problem. So I'll take the brother when you remember, so I can take your question.
My question was, you look for the house or I look for the house?
So here's the steps. That's a good question. First of all, you need to get pre-qualified with us to see how much you can afford and if you can afford whatever the house you are looking for. Okay. Then, since you know what's the price you are looking for, then you can go to the market, either work with a realtor or look on your own and look for the houses within the price range we're going to get you approved. Okay. Once you have the house selected, you like it, you sign the contract, you get back to us. Brother, I just found the contract, this is the closing date, this is the term. Now this is where I'm going to start working on getting the title with cleared with the title agency, order the appraisal, make sure everything's fine, and go toward the closing. So if you don't have anybody to help you with looking for a house, I myself, I can help you. We have other agents across the nation, they can help you to look for a house, inshallah. We have a question.
Okay, so I want to go back to the qualification in terms of like work history. So working for 15 years, then now I start getting my retirement. So will I have to wait 2 years?
No, like I said, the 2 years exception applies to a retirement. You don't have to wait for 2 years as a retirement. You can basically after the second, third month. I mean, when you retire, sometimes with Social Security, sometimes you will get a benefit letter that will tell you for this year, this is how much you're going to get. That's more than enough. That letter with the first payment, that's all we need. We don't have to wait 2 years. Yes, well, I think you had a question.
Did he recommend people to the guidance?
Mm-hmm.
Did he give any kind of benefit behind that?
Tough question, because I wish I could say yes, because we can't. I mean, as far as company, we don't give referrals, but what we can do is customers working with the realtors that they are partnered with guidance, we try to cover for at least their appraisal fee. That's kind of encouragement, okay? So at least they will pay for it to order the appraisal, and at the closing date, we'll credit back to him up to $500. But there is not a pure referral, just to answer your question. Any other questions? I hope I answered all your questions. So please, I mean, I'll be here inshallah. Take my business card, you have my cell phone number, my email. If you have any questions, doesn't matter if taxes, insurance, or anything, I'll answer them as best of my knowledge, inshallah. Thank you so much for your time. Thank you so much, Imam Hatim. It was great. Alhamdulillah. So I hope that very good questions, mashallah. So they asked about the approval and everything. So I guess they are good to go, inshallah. I just need to look for the house.
Alhamdulillah.
Alhamdulillah.
Okay, we'd like to thank you again, Mr. for coming. Takbir. 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 Alhamdulillah. So, like he said, he'll be available like right now if anyone wants to talk directly with him. Any more specifics you need to know about. And he did give some information. This was one of the, I would say this was a very good presentation in regards to the PowerPoint and all of that, and explanation and stuff like that. And the details is what, alhamdulillah, we appreciate the detail. In any presentation, alhamdulillah. So brothers and sisters, it's basically adjourned. We're going to ask Mustafa to give dua, inshallah, and then after that, sisters can come get some food. I don't know what we have tonight. I think we have...
So, Imam, I'm not qualified to make dua. You are the Imam, so please make dua.
Okay, let's make dua. ربنا لا تزغ قلوبنا بعد إذ هديتنا وهب لنا من لدنك رحمة إنك أنت الوهاب. ربنا آتنا في الدنيا حسنة وفي الآخرة حسنة وقنا عذاب النار. لا إله إلا الله وحده لا شريك له له الملك وله الحمد وهو على كل شيء قدير.
آمين.
آمين. السلام عليكم ورحمة الله وبركاته. Please let the sisters